It's 10 a.m. in London, 5 a.m. in New York City. Good morning. I'm Kriti Gupta with your Bloomberg Brief. Bonnie Quinn is on assignment. Let's get started with what you need to know. A terrible week for tech. Valuation worries knocking global equities as shares of mega-cap stocks sell off despite pockets of positive earnings reports. And the Tesla trillionaire. Shareholders approve a $1 trillion compensation package to Elon Musk, marking the largest payout ever awarded to a CEO. And airlines across the United States begin canceling flights as the government shutdown drags on. We are live on the ground. In the meantime, let's get a quick check on these markets. As, of course, we go into the weekend, everything's fine. Futures are positive, virtually unchanged on the S&P. E-minis there, 67.50 is where we are on those contracts. Same story for the NASDAQ. The Russell higher by 0.1%. But right off the bat, this really tells you what kind of market we're in. Kind of a sleepy one on this Friday. Let's see if the bond market is any different, because I actually think that maybe we're getting a little bit more action here. Looking across the curve, I'm looking at a 10-year that's higher by about 2 basis points. A similar story on the long end of the curve and, frankly, on the short end as well. So maybe we'll see a little bit more action as the day progresses. In the meantime, let's go from the macro to the micro, get some of our stocks to wash with Chloe Melly. Chloe.
Good morning, Kriti. Let's start with Tesla, which is up this morning after Elon Musk said he expects China to fully approve self-driving software by next March. So this follows a lot of lobbying in the last few years. And Tesla is really banking on this to revive sales in a market where it's been losing quite a lot of ground. Moving on to Expedia, which is also up this morning. The online travel agency reported quite strong results thanks to resilient travel demand. So alongside results from Airbnb, this really goes to show and signals that the U.S. travel market is in pretty good shape, and that reassured investors. And finally, over here in the UK, the property listing portal Rightmove is down massively this morning after saying it expects a flat revenue growth because of AI investments. So shares fell the most on record, and now it puts pressure on management to convince investors that now is the right time to be making those massive investment decisions.
All right, Chloe Melly there with some of our early movers in the pre-market, and of course in the European hours. Thank you so much. Later this hour, we're going to take a closer look at the labor market with Citi's Veronica. She'll be joining the program shortly. But first, let's talk about this $1 trillion pay package for Elon Musk.
Sixth and finally, on the 2025 CEO Performance Award to our founder and CEO Elon Musk, with over 75% voting in favor, approved.
Joining us now for the latest, Bloomberg's Global Autos editor, Craig Trudell. Craig, I don't know what you do with the $1 trillion, but I am curious as we talk about this kind of pay package, how did we get here? How viable is it that he ultimately gets the $1 trillion?
I guess what you do is you dance with a humanoid robot, because that's what we saw Musk did after that moment last night. That at least is step one. I guess some of the things that he threw out there yesterday were really sort of over the top, even for him, talking about sending Tesla vehicles to the moon and Mars. The robot that is still very much a prototype that does sort of simple tasks like dancing on the stage or handing out candy at the stock exchange last week. Eventually, that's going to be a really good surgeon. He says he's going to have to make good on at least some of these really out there ambitions to realize this pay package, because Tesla has to go from roughly a $1.5 trillion company to $8.5 trillion worth of market cap. And, he has to grow their earnings by many multiples as well. So, whether or not he actually, receives all of the stock that is made available to him, pending all of these performance metrics, a lot of these sort of further out targets are going to be really tough to hit.
Well, as you speak, we're showing a graphic of Elon Musk basically tweeting, or formerly tweeting, truthing, I think is what it's called now, depending on your social platform, saying that there's a lot of rabbits to pull out of the hat. In the meantime, let's talk about the rabbits he has successfully pulled out of the hat in previous iterations, and that, of course, is Tesla's exposure to China. It looks like China's set to fully approve the full self-driving vehicle early next year. Is that going to come to fruition, Craig?
Yeah, I guess that was an interesting tidbit from last night's presentation because there was a full-on push on his part, actually going back last year, for him to go to China and sort of cancel on Modi in India at the last minute to meet with the premier in China and get a regulatory approval for what Tesla calls full self-driving. They, interestingly, have not been able to actually market it as that in China because the system has to be monitored at all time. It is not actually capable of driving the car itself. And, it will be sort of, I guess we'll see whether or not the ministry actually, is willing to give him the approval that he says they've communicated to the company could come, in the sort of early part of next year. What we've seen is that the regulators in China have been, pretty conservative and slow to approve this sort of technology. And also that there's been greater scrutiny on crashes involving these systems. And so, while that may be the sort of rough plan or the tentative timeline that's been given, it remains to be seen whether that has sort of staying power and will be something for us to watch in the sort of, end of first quarter, early second quarter of next year.
All right. Craig Trudell, our global autos editor, we thank you so much walking us through the dynamics of, again, a $1 trillion unprecedented pay package. Over in Washington, President Trump, in the meantime, pushing for a rare earth deal.
One of the key items on our agenda is critical minerals. In recent weeks, my administration has strengthened American economic security by forging agreements with allies and friends across the world to broaden our critical mineral supply chain.
The President of the United States there. I just want to get to some headlines that kind of echo the exact sentiment he said in that piece of sound. China looks like it's going to be suspending export control on some rare earths, some super hard materials, as well as some of the export curbs till November 10th of 2026. Those headlines, of course, crossing the Bloomberg terminal. They're also saying that the suspension is part of the trade truce agreement. Bloomberg's Brendan Murray is here on set to walk us through some of this. We kind of knew this was coming based on the readout of the two sides.
Yeah, this is the implementation of the pledges that the two leaders, President Xi and Trump, made in Asia recently. And so this is what the U.S. wants to see. It wants to see not just the promises that they've made, but the actual actions taken. Now, we'll have to wait and see in the data if whether those critical minerals continue to flow. But in the meantime, President Trump has met with the Central Asian leaders, and the U.S. is trying to diversify its supply chains more broadly. He did that throughout his trip to Asia last week with Japan, Malaysia, and some other countries. So this is really the race that the U.S. is on to catch up to China's dominance in rare earths.
And we actually saw some of the data come out from China today where they did actually see some of the export volumes maybe drop. But there are other parts of the world that are perhaps picking up where China is leaving off.
Yeah, exactly. China. These were the October trade numbers, and so this was at the very most of the tariffs that the U.S. have applied, and a lot of exports to the U.S. went elsewhere. I think the drop was about 25%. By the same token, we saw Taiwan's exports really surge to levels we haven't seen in a long time, and that's based on semiconductors. And semiconductors, of course, are exempt from the U.S. tariffs. So those continue to flow into industries like artificial intelligence, where the boom continues nonstop.
Talk to us a little bit very, very quickly. We're also expecting Viktor Orban to be at the White House today. Does that affect any of these trade flows at all?
It's part of the transactional diplomacy. Orban's going to come and promise to buy U.S. LNG and some nuclear fuels, and so it's part of the delicate balance that the Trump administration is trying to strike with countries that also have alliances with China and Russia.
Yeah, it's really fascinating. That's a bromance that's been in the works for some time. Does it fall apart today? Bloomberg's Brendan Murray walking us through plenty of those trade details. We thank you so much. Let's go back to the corporate space. Eli Lilly and Novo Nordisk have secured deals with the Trump administration to slash prices for their blockbuster weight loss drugs, all in exchange for tariff relief.
Eli Lilly and Novo Nordisk have agreed to provide all of their other medications to Medicaid at most favored nations prices. Most favored nations, meaning that you will pay the lowest price anywhere in the world. That's what you're going to pay. Whereas before they paid low prices and we paid, thousands of percentile ahead.
Let's get more on this from out of our Copenhagen bureau. Our bureau chief, Sarah Soilen, joins us this morning. Sarah, just walk us through what we learned here. I mean, is this enough to maybe get some of the pressure off the likes of Novo Nordisk and some of the other pharmaceutical companies here in Europe?
Well, it's definitely enough to take off some of that political pressure that's been one of the things that we've been focusing on for Novo Nordisk. As we reported in recent days, there's a lot of stuff going on for the company. They're being squeezed by competition in the US. They're also trying to take over Metsera. So this is really nice to know that there's at least one thing now that we know is settled. An agreement was largely expected, and the outcome is pretty much as anticipated. Novo Nordisk has already come out and said that they estimate that there'll be a low single-digit negative impact on group revenue for the next year. But analysis that I've talked to, they point out that this will be mitigated by the potential in the market now. So now they will get wider Medicare access, so they have a potential to reach a lot more customers. So it might be at a lower price, but then you're expanding the market. So on the short term, we're seeing it remove some of the regulatory risks. We know they won't keep getting hit by tariff levels in the coming years if things continue as they are now. So now they just have to sort of, if you will, roll up the sleeve and get to operate under the new conditions. But the political noise, if you will, has just been one of the issues for Novo lately. So we're still waiting to really see everything from the transformation plan pan out.
Talk to us a little bit as well about the Metsera deal. You had mentioned it, of course, and this is something where Novo, although decreasing their prices in the States, is increasing their bid for this company. Can you just explain to us and to our global audience why a company that only has 100 employees?
Yeah, I think that's a question a lot of people are asking themselves at the moment. So as I see, there's an arms race going on in the obesity market right now. Pfizer doesn't really have an obesity asset. They really, really want to buy something to get into this very lucrative market. Novo Nordisk, as we know, they have a really popular product, but they're losing out to Eli Lilly at the moment. We're not sure if the pipeline is really strong enough to stand up against some of the other competitors. So this is a way of buying a new product to the pipeline. And they're saying this is really complementary. It will reach out to more of the patients and obviously be something that really fits with the company. So we have these two companies, big global pharma companies that just want this asset. And I guess only time will tell if this is the right price or if they will end up overpaying.
All right. Bloomberg's Sarah Soilen, we thank you so much, our bureau chief out of Copenhagen, walking us through this very juicy, starting to get juicy story between Pfizer, Novo Nordisk, and, of course, Metsera. We thank you so much. Let's go to the other top stories trending on the Bloomberg terminal this morning and kick it off with shares of British Airways parent IAG sliding after saying its all-important North Atlantic route experienced some weakness in the third quarter. Of course, weighing on earnings that missed estimates, the North Atlantic accounts for about a third of the company's total capacity. European airlines have been cautioning for months that passenger demand in the United States is more restrained. And Goldman Sachs promoted a record number of staff within its Asia Pacific Private Wealth Management unit to managing director. The biggest number came from the Global Banking and Markets division. Globally, Goldman promoted the smallest proportion of women to managing directors since CEO David Solomon, of course, at the helm of the company, took the job in 2018. And China's exports contracted in October, falling 1.1% from a year earlier. Global demand failed to offset the slump in shipments to the United States, and shipments to all other nations except the U.S. rose 3.1%. It was not enough to compensate for the more than 25% decline to America, something we were just talking to our correspondent Brendan Murray about. Coming up on the program, we go from tennis to business. We hear from Serena Williams on her life after a legendary career and the learning curve that came with launching a venture firm. That conversation coming up next. This is Bloomberg. This is Bloomberg Brief. I'm Kriti Gupta in London. Welcome back. Nearly a decade after launching Serena Ventures, Serena Williams channeling her competitive spirit into investing. She spoke with Bloomberg's Danny Berger at the American Business Forum in Miami about planting the seeds of her business career far before she left tennis.
I don't like the word retired, but when I evolved from tennis, I had already been investing for, I don't know, like 8 years at the time. I'd already had my firm. I'd already built a great team of people that were way smarter than me around the table. And it wasn't something that I would just have a hard fall from. I felt like I wanted to have a softer landing, which I don't know if I did or if I didn't. I wanted to have a softer landing, but I also didn't want to start something new when I just finished something. And that's something, again, my dad always told me, like, you can't go into something brand new when you finish, you need to already have it started. You need to already have a plan. You know, if you don't have that plan, then it's going to be difficult to start something new. And so I was really grateful for that, because if I were to have started investing now, after I retired, I mean, oh my gosh, the learning curve and doing everything, it would have taken years and years, and a lot of that experience was already done while I was playing. So,
well, you know, it's such a good point that it is the model now that as an athlete, you're almost expected to be so much more than that. But even so, there have been a lot of public figures who've decided to go into investing, especially because you were early on in doing that. Did you face any sort of stereotypes of people rolling their eyes saying, what is an athlete doing in business?
I did, not too many, but there are obviously a lot of people rolling their eyes and saying, like, what are you doing in investing? But again, that now was over 15 years ago. So I definitely was earlier on, I was much earlier on the curve when it came to investing. And it was something that was really innate, that I just kind of flowed to, and there was something that really just attracted me. And it was actually early stage investing that really attracted me for whatever reason at the time. Of course, I didn't know it was called early stage. I didn't know what anything was. I didn't know what a seed was. I didn't know any of that stuff. It was this really great learning experience. I loved what Jamie Dimon said earlier, how life is really just about learning. You're learning every single day, and that's kind of a theory that I love. And that's one thing I love about VC. Every time I step into the office, I feel like I'm in college and I'm learning something new about some other product and what it does and what it doesn't do, and how we don't have it yet.
Serena Williams there speaking with Bloomberg's Danny Berger at the American Business Forum. Really fascinating conversation. I encourage everyone to go watch it on Bloomberg's platforms. In the meantime, a quick check on these markets. Of course, we are getting closer and closer to the U.S. cash open, 9:30 a.m. Eastern. In the meantime, futures are not giving us much. Shares are only down about 0.1%. We are seeing some strength in the dollar, though. You're seeing that affect the euro. You're seeing that affect the pound as well. And the 10-year that is higher is probably where the dollar is getting its cue from. Coming up on the program, travelers brace for disruption as the U.S. government shutdown threatens holiday flights. More on that and the other top stories making headlines across your front pages next. This is Bloomberg. Welcome back to the Bloomberg Brief. I'm Kriti Gupta here in London. Time now for your front page news. First up, it's the Washington Post. Travelers bracing for turmoil as flight cuts kick in at major U.S. airports. Airlines have canceled hundreds of flights to comply with the shutdown-related FAA directive to reduce traffic at 40 airports, which include New York, Atlanta, Chicago, and Dallas. Next up, it's the New York Times. A federal judge has ordered the Trump administration to fully fund food stamps for roughly 42 million low-income Americans. The Justice Department almost immediately told the court that it would appeal the ruling that Vice President J.D. Vance attacked the court for what was described as a, quote, absurd ruling. Moving on to the Wall Street Journal, Blackstone offloading a flopped $1.8 billion investment in senior housing, which has resulted in more than $600 million in losses. Now, Blackstone began substantially unwinding the senior housing bet in 2022 and has already sold about 70 of about 90 senior facilities as a whole. We'll continue to monitor those stories for you on Bloomberg, across Bloomberg programming on both sides of the Atlantic. In the meantime, a quick check on these markets here, because when you look at the futures picture, it's not giving you much. It's only down by about 0.1%. Euro-dollar unchanged at 115. That was not the story earlier today, where you did see some dollar strength actually pushed the euro down. That has been a key trend here. 114 seems to be the line in the sand that the currency move can't actually breach. On the other hand, maybe it's getting its cue from this Treasury move that you're seeing here. A U.S. 10-year higher by about 2 basis points. Maybe that's what's driving the strength in the dollar, although you have seen that correlation start to come out for just a little bit. In the meantime, I want to give you a quick check on what's happening on this side of the Atlantic here, because perhaps maybe getting a little bit more action. Before I jinx it, I desperately want to check. We definitely are. The stock 600 down about 0.5%. A good chunk of that move is coming from the healthcare space. The Novo Nordisk story, AstraZeneca, the drug pricing conversation over in the States very much having a tradable effect right here in Europe. Brent crude is another one, higher by about 1.5% this morning. But keep an eye on this. NYMEX crude, I should say, trading at about $60 a barrel. Brent crude is at about 64, 65. So you are seeing that spread between Brent and WTI start to widen just a little bit. It's interesting. You're seeing a 2%, almost 2% move. I'm rounding up here in the oil space, despite not much action in the equity market. Maybe that's something that's going to come together a little bit later. And lastly, we are looking at the pound, 131 on cable, down about 0.3%. When I was talking about the dollar strength, it is showing up in currencies around the world and certainly right here in Europe as well. And that's something that's going to be really driven by some of the data that we get later today, which brings us nicely to what we're pushing ahead to. The UMich sentiment survey is something we're going to be discussing. Citi's Veronica is going to be the economist joining us on the show. Should we be worried ultimately about some of these concerns that we are seeing in the data? Should we be concerned about the ripple effects that we're seeing in the market? Is the wealth effect very much something that's going to show up in the next couple of weeks? That's the conversation we're going to have with Veronica Clark, Citi's U.S. Economist. Stick with us. This is Bloomberg. It's 10:30 a.m. in London, 5:30 a.m. in New York City. Good morning. I'm Kriti Gupta with your Bloomberg Brief. Bonnie Quinn is on assignment. Let's get to what you need to know this morning. It's been a terrible week for tech. Valuation worries knocking global equities as shares of mega-cap tech stocks sell off despite pockets of positive earnings reports just here and there. Plus, of course, the Tesla trillionaire shareholders approving a $1 trillion compensation package to Elon Musk, marking the largest payout ever awarded to a CEO. And airlines across the United States begin canceling flights as the government shutdown drags on. We are live on the ground. A quick check on these markets here because you are seeing futures not go anywhere in a hurry. S&P futures virtually flat right now, 67.43 on those E-mini contracts. Nasdaq 100 futures a similar story, not moving up, not moving down. Maybe that shakes out as we get closer and closer to the opening bell. In the meantime, the Treasuries market is kind of where you see maybe a little bit more action. All 2 basis point move across the curve in the 30-year and the 10-year. 410 on that 10-year ahead of maybe a little bit of UMich data later later today, I should say, for some more stocks to watch. Let's go to Chloe Melly. Chloe.
Good morning, Kriti. Tesla is up slightly this morning after shareholders approved a $1 trillion pay package to Musk. And Musk also said that he expects China to fully approve a self-driving software by early next year. So this is something that Tesla has been really banking on to revive sales in a Chinese market, where it has been losing quite a lot of ground to domestic rivals. Moving on to the online travel agency Expedia, which is also up this morning, up quite impressively at 16% after reporting really strong results thanks to resilient travel demand. So alongside results from Airbnb, this really confirmed that the U.S. travel market is in pretty good shape, and that reassured investors this morning. And finally, the video game publisher Take-Two is down this morning in pre-market trading after delaying once again the release of Grand Theft Auto, the much anticipated title. This actually overshadowed what has otherwise been quite strong results for that company.
All right, Chloe Melly walking us through some of those early movers. We thank you so much. In the meantime, let's go right back to the macro. Investors awaiting the latest UMich sentiment data for mixed private jobs data from earlier this week. I'm not really sure what to make of it, but I know someone who does. Veronica Clark, U.S. economist over at Citi, joins the program this morning. Veronica, a couple of days ago when we got that Challenger data, it was enough to move the markets, even though we don't really see Challenger data move the markets very much. How much stock should we be putting into a data set like that?
Yeah, it is a bit frustrating when we're not getting the official government data. We're kind of grasping for straws and trying to take signals from any of these other third-party data sets. I think that Challenger job number, it just kind of confirms what we were seeing in some of these headlines a couple weeks ago, that there are some bigger layoffs at some bigger companies, at least attention grabbing. I think for now I would be really cautious to take those announced layoff plans and translate them to what that means for the hard data. We are fortunately still getting the weekly initial and continuing jobless claims numbers. We're getting that from the states. And we didn't see a substantial move higher in initial claims in that data that we got yesterday. So those layoffs, if they are bigger, they're not quite showing up in the hard data yet.
Veronica, that data showed actual job losses as opposed to just not hiring. And I think that's a really key distinction that this market may be not really recognizing right now. It feels like the market is treating the U.S. economy the same as if it were slowing down, as the same as if it were, say, a recession. Veronica, where are we on kind of the economic cycle? Are we in a slowdown? Is a recession right around the corner, or are we seeing a reacceleration?
Yeah, I think most, at least, our expectation and most other expectations are that, yeah, we're in this slowdown. We're not in that recessionary, scenario yet. But I would say, this has been a very low hiring but low firing labor market for a while, and we've seen pockets of weakness in the hard data, pockets of stability, but what hasn't changed is we have not seen a pickup in hiring, and I think I would want to see actual demand for workers start to pick up and recover before I wouldn't be worried that layoffs are that next step.
Well, Veronica, that brings to me about a big question here, because it felt like a lot of the maybe hiring pauses and freezes we were getting was really a function of some of the kind of back and forth tariff policy, trade policy, regulation, et cetera. Now that there is a trade truce in place, at least for another 12 months, we got Chinese confirmation of that earlier today. Do you think that some of those hiring freezes are going to unfreeze?
I'm not really expecting that. The uncertainty that we had over the summer, it could be one aspect of the weaker jobs data that we had over the summer. But this has really been happening for 2 years. This predates all the tariff and policy uncertainty from this year. Of course, we had the weaker jobs data last summer. That's why when the Fed started cutting in 2024, they started big with a 50 basis point cut. So this has been happening not necessarily consistently, but happening before this year.
Well, it takes us nicely to the data set we're going to get later today, and that, of course, is the UMich consumer sentiment data. Veronica, is that data set going to be a positive one, given that the market's been selling off in a really big way?
Yeah. It's, consumers are, of course, sensitive to what they're hearing about, what's happening in markets. They're very sensitive also, especially in that University of Michigan survey, to what they're experiencing in terms of prices. So if we see some stickiness in inflation, some price increases, people tend to feel worse about that. I think the most important elements are, maybe how people are feeling about the labor market, because we don't have the best signals right now. We don't have the hard data, unfortunately, but how people are feeling, perceiving job availability could maybe be telling us something too. We certainly see in the Conference Board data, not this UMich one, but some of the labor market indicators in that one do look like people are feeling worse about the labor market.
Talk to us then about what other data sets we should look at. It doesn't seem like a government shutdown is going to be ending anytime soon. In fact, maybe prolonged even further. But just walk us through the actual ramifications of some of that, first from the data front and then from the economic front.
Yeah, the longer that the shutdown lasts, the bigger the drag becomes. And there is this idea that, you will be back paying a lot of these workers. A lot of this activity could be made up. But the longer it lasts, some of that drag, I think, becomes more permanent. There are just, you don't go out to eat at a restaurant. You're not going to necessarily backfill that kind of activity. Certainly all the travel issues. Once we get the data, where we fortunately do have things like those state initial and continuing jobless claims numbers, they kind of tell us that, things are not getting dramatically weaker in the labor market, but they're not getting better either. So I think once we see eventually the official data, it'll be the same story of, job growth is essentially averaging close to flat. That's a pretty soft labor market. And the trend, of course, is what's more concerning, has just been getting weaker.
All right, Veronica Clark of Citi walking us through some of the data that we can expect, some of the data we should take away from the job story, and then, of course, the impact on the government shutdown. We thank you so much for joining us this morning. Let's get to some of the other top stories that are trending on the Bloomberg terminal. Kicking it off with commodity trader Gunvor Group, which has withdrawn its offer for the international assets of sanctioned Russian oil producer Lukoil. The move comes after the U.S. Treasury Department called it, quote, the Kremlin's puppet, and said that the oil and gas trader would never get a license. And Goldman is promoting the smallest share of women to managing director since David Solomon became CEO. Women make up 27% of the new class, down from 31% in 2023. It also promoted a record number of staff within its Asia-Pacific private wealth unit to managing director. And over in the Middle East, Israel launched some of its heaviest airstrikes on Lebanon since its ceasefire with Hezbollah about a year ago. They targeted Hezbollah weapons sites and infrastructure in southern Lebanon. The attacks have stoked fears that the two sides will revert to a war. Lebanon's president called the strikes a, quote, full-fledged crime. Coming up on the program, we go right back to the corporate space. A $1 trillion pay deal for Elon Musk. Tesla shareholders approving the biggest compensation package in history. What does it mean for the company, though? We'll get the details next. This is Bloomberg.
sixth and finally, on the 2025 CEO Performance Award to our founder and CEO, Elon Musk, with over 75% voting in favor. Approved.
A historic first. Tesla shareholders approving a $1 trillion compensation package for Elon Musk. The pay agreement clearing a path for the CEO, the world's richest person, to become the first ever trillionaire. Now, I don't know what you do with $1 trillion if you get it, but maybe our next guest does. Bloomberg's global business editor Jamie Nimmo joins the program this morning. Jamie, I won't ask you how to spend $1 trillion. I'm sure you've got plenty of ideas, but I am curious what this means for this company. There's some pretty lofty targets he has to hit to actually get the $1 trillion.
Yeah, I was thinking about that question. What would I do with $1 trillion? I'm not sure anyone knows. I'm not sure even Elon Musk knows. It might have something to do with Mars, I guess. Yeah, there's some pretty lofty targets here. Along the way, they've got to hit, market cap, targets along the way, as well as operational targets, including vehicle numbers and so on. Pretty stretching. Some of them aren't as stretching as you might imagine. The vehicle targets, slightly more attainable, the early targets. This happens in segments. So if he hits each step, he'll get a certain amount. So that makes it a little bit easier. I mean, we're talking about the shift to EVs globally. It might be happening a bit more slowly at the moment, but ultimately it will happen, and that some of those targets will be slightly easier to hit, I'd imagine.
Well, talk to us a little bit about, as they are looking for these lofty targets, Tesla's approach to China here. Musk also said there might be some approvals coming their way.
Yeah, we're not exactly sure what those are at the moment, but China's a key market for all automakers globally, especially Tesla. A key EV market there. Something like more than 50% of new car sales are electric, which is way ahead of major markets like the US and other markets in Europe. So the key market for Tesla to crack. And that market particularly will be probably the key to unlocking that growth and hitting those targets to hit that $1 trillion mark.
Is that something that Elon Musk is going to spearhead? I mean, we know that was one of the big advantages that Tesla used to have, how they were operating in the Chinese market. Is that still a win for Tesla, or under this administration, is it kind of an Achilles heel?
I mean, it's proving difficult for everyone at the moment. I mean, we've seen the European automakers really sort of pull back from China, finding it really tricky there. You've got BYD and others, the local players, pushing hard, and there's a real price war going on. So that market is really tricky at the moment. Now, how it plays out over the next few years, who knows? And, as luxury spending kind of recovers, people start to spend a bit more on Tesla vehicles and others like it, might start to increase in demand. That might help them there, but it's clearly a key market that they will be spending a lot of time and trying to work out how to crack.
All right, Bloomberg's Jamie Nimmo walking us through, again, a historic first, $1 trillion pay package for Elon Musk. We thank you so much. Let's head over to Washington, where President Trump met with 5 Central Asian countries to seek rare earth deals.
One of the key items on our agenda is critical minerals. In recent weeks, my administration has strengthened American economic security by forging agreements with allies and friends across the world to broaden our critical mineral supply chain.
Joining us now from our Washington bureau's Bloomberg's John Harney. John, good morning. Just walk us through what we learned here. We know the president has been on a deal hunt for these rare earths. Is it enough? Has he gotten enough supply?
No. To be very brief about it, I mean, this is an ongoing problem, and it has echoes, curiously enough, with the Great Game, the confrontation between the British and Russian empires of the 19th century that centered on Central Asia. China has agreed to lift its restrictions on rare earth shipments, but, I think the various companies, government agencies, other governments can't fully trust that. So they must look elsewhere. And President Trump has made forays to these countries in Central Asia, which were part of the Soviet orbit and under Russian influence in Tsarist times, really, and still have close ties to Russia. But they're eager for new contacts with the West, with the United States, given the sanctions that have been imposed on Russia because of the Ukraine war. And China, of course, is also very interested in this part of the world.
Certainly something we're going to be keeping a close eye on. Let's go from the deal-making on the geopolitical front to the deal-making in the corporate sphere. The president also announced yesterday deals with two pharma giants. Take a listen.
Eli Lilly and Novo Nordisk have agreed to provide all of their other medications to Medicaid at most favored nations prices. Most favored nations, meaning that you will pay the lowest price anywhere in the world. That's what you're going to pay. Whereas before they paid low prices and we paid, thousands of percentile ahead.
I mean, John, this is a really interesting dynamic. You're now seeing something that Joe Biden had actively pushed for in his administration kind of being executed here by Donald Trump, and not even on regular drugs, on weight loss drugs. Just walk us through your take on this.
Well, there's several elements to this. President Trump campaigned against drug prices, against the pharmaceutical establishment, and he installed Robert Kennedy, a longtime critic of the medical drug industrial complex, if you will, as in his cabinet, in his administration. Now, he seems to be making accommodations with these companies, or they're doing it with him, and it's all playing out with the whole tariff and. With tariffs and other issues. Now, this, of course, does happen. This unfolded the week that Republicans received some bad news at the polls in the elections, and those elections show that voters are very concerned about prices, and that includes drug prices.
John, very quickly, let's go on to what's going on with the government shutdown, hitting new roadblocks here. What are we seeing?
Well, back to the elections on Tuesday. It seemed earlier this week, and even late last week, that there was some sort of agreement in the works where certain so-called moderate Democratic senators would agree to, with Republicans, to reopen the government with some somewhat vague promises of action on health care subsidies that led to this clash. This standoff, but that now seems to be fading. That hope seems to be fading. Speaker Mike Johnson said yesterday that he was, and Democratic senators said they were less optimistic. And at the same time, President Trump said openly that this has hurt Republicans, despite Mike Johnson and other congressional leaders saying. Or blaming the Democrats since this began. We're now on, I think, day 39 of this.
That sounds about right. Bloomberg's John Harney in Washington giving us a roundup of some of the top stories, of course, there. We thank you so much. I want to continue on that theme of the government shutdown because one of the consequences is major disruption when it comes to air travel. About 700 Friday flights already canceled by the four largest airlines stateside. Joining us now from Newark Airport is our very own Nora Melinda. Nora, just walk us through what you're hearing, what you're seeing on the ground.
Well, Creddy, we've been here for about an hour at EWR Airport, and we've been talking to different people. We've really been seeing droves of individuals coming here, but in talking to some representatives at United, which of course we know to be one of the major hubs here in Newark Airport, they're really saying that this is not uncommon, the amount of people that are here today. But of course, what still remains on the mind of a lot of travelers right now in this moment is flight disruptions. This is something that, of course, we've been grappling with the ongoing government shutdown. We've got TSA workers, air traffic controllers not being paid here since October 1st. So this is really in focus right now with a lot of travelers really just anticipating major delays here.
I mean, not helpful at all going into Thanksgiving or ultimately Christmas if this goes on. Nora, just connect what's going on the ground to a business audience for us.
Absolutely. I mean, if you think about the fact that this has cost the U.S. economy $15 billion each week that we've seen this government shutdown prolonging. And of course, as you're mentioning here, we're headed right into the holiday season, which of course we know is a busy time for travelers. We even had Vice President J.D. Vance talking to a lot of airline executives discussing the fact that if this continues to prolong, it of course could bleed into the holiday season. And that's not good for, of course, the economy, travel, Americans more broadly here. So this still is a fear that a lot of people are grappling with, as we're really trying to see a resolution here and some sort of solution here for this government shutdown.
All right, Bloomberg's Nora Melinda at the Newark International Airport giving us a lay of the land as we start to see more of these cancellations pile up. Thank you so much for your reporting bright and early for us in New Jersey. Coming up on the program, we're going to get you set up for your trading day with more earnings and, of course, UMich sentiment data on deck. Stick with us. This is Bloomberg. Welcome back to Bloomberg Brief. I'm Kriti Gupta in London. Let's take a look at what's going up ahead today. We've got plenty of earnings. They are not over, despite it being a Friday. Constellation Energy, KKR, and Wendy's reporting before the opening bell. That's right back to the data front. The UMich sentiment survey coming up at about 10 a.m. Eastern time. Is that going to give you the same trends, the same panic that you saw when it comes to perhaps the challenger data we got earlier this week? And of course, Monster Beverage reporting after the market close, as promised. So just because it's Friday does not mean the earnings are over. In the meantime, let's take a look at some of the micro movers that are already seeing plenty of action this morning. I'm going to start with Expedia raising their full year outlook, citing some resilient travel demand, a different story from what we heard from IAG on this side of the Atlantic. Nevertheless, shares higher by almost 17%. Also some good news from a firm. Improved 2026 guidance, beating their estimates. Our interview with CEO Max Levchin coming up on Bloomberg Technology at about 11 a.m. Eastern time. And lastly, one stock that's not doing so good in the pre-market, Open Door Technologies, the online home buying platform, posting wider than expected sales losses and really getting punished for it. Those shares down about almost 23%, trading about $5.09 a share. Let's zoom out for a little bit and talk about the macro story, because S&P futures, you're seeing plenty of volatility on a micro basis. You're not seeing it on a macro one. S&P futures virtually unchanged, 67.45 on the S&P E-minis. Same story for the Bloomberg dollar. You did start to see some Bloomberg dollar strength earlier in the session. Some of them might be getting their cue from a 10-year yield that's higher by 2 basis points. When you look at what's happening on this side of the Atlantic, I still think it's pretty interesting, because a stock 600 picture is very different from what you're seeing over in the States. Down by 0.5%. A lot of those losses coming in the healthcare space. One eye firmly on Novo Nordisk and their fight with Pfizer over Metsera. That seems to be bleeding into the broader healthcare space, despite that drug deal between the getting prices lower in Washington yesterday. NYMEX crude at $60 and cable down about 0.2%, 131 on that transatlantic currency pair. Lots going on in the macro space, lots of earnings, lots of geopolitics to watch. It feels like a quiet Friday, but then you look at some of these earnings numbers and it doesn't quite feel like it's all over. That does it for Bloomberg Brief. Surveillance is ahead with lots of fantastic conversations. Stick with us. This is Bloomberg.